Good afternoon. This is Brian Shannon from AlphaTrends.net. Today is Monday, the 14th of January, 2008. The market's closed, and we had some more buying here today, but the volume was light. So we are in a downtrend, and light volume typically means that the buyers just don't have that much conviction. It's more an absence of supply that allows prices to move higher here. And you want to be very suspicious of any rally when we have such a strong downward trending market like we have here in the S&P 500 with a declining 10, 20, 50, 200-day moving average. They're all declining. And the market's trying to find a little bit of support in here. However, the volume has trailed off the last couple days, and again, that gives us reason for concern. When we look at the shorter term time frame, like the 10-minute, this is a trend line that we've been looking at the last couple days, and you can see the market came right up to that level. The encouraging signs in here are, again, that 140 is holding as support right now. And then obviously we've got this also the 5-day moving average is starting to flatten out a little bit. We've been looking at this inverted head and shoulders pattern take form, and it's really going to take a move above this key level of resistance here, what's been resistance and what has the potential to be resistance again at 143. Now that trend line is obviously our first obstacle for this market. And if it can break above there, then we may see a run up towards that 143 level. As we saw today, the earnings reports are really starting to begin to flow this week, so they're going to be very instrumental in movements in individual stocks. So make sure you have an eye on which stocks are reporting earnings, and don't allow yourself to be blindsided by a movement in reaction to those. We've also got a lot of economic numbers this week that are going to be key to the macro environment. So we've got a lot of potential catalysts, and we see this 10-minute time frame is starting to it's really more neutral now. We've seen the sellers really take control, but now it's more neutralized here, and it's basically up for grabs, the trend of the short-term time frame, that is. We do have a potentially bullish pattern setting up in here. However, these consolidations is what I was trying to say there in a downtrend environment typically will resolve themselves in the direction of the primary trend, which is obviously lower. And again, this weekly time frame looks bad. The only good thing we can say about it is that it's oversold and maybe due for a bounce. So if we get a bounce and you start trading a little bit more aggressively alongside, be sure to reduce your risk towards the end of each day and make sure you know if the companies that you're trading and you're involved in are due to report earnings. If we look at we can see a little bit maybe more clearly here, even on a 30-minute time frame, that it looks like it's making this bottoming action. And again, here's that inverted head and shoulders pattern. The height of this pattern is about 138 up to 143. If it breaks past there, we add that 5 points to the height of, we add that to the breakout point. We take the height of the head and shoulders pattern, add it to the breakout point, come up with 148. Again, though, 144 is a important level. It was very important as far as support, so it's a potential likely area for resistance once again. And I also want to point out that we typically see selling near these Fibonacci levels. So that 50% retracement is right near that 144 level and strengthens it as a potential level of resistance. Then we've got the 145 just above that. So there's a lot of mixed messages in this market. However, the primary trend is lower, so continue to be very careful in here. The semiconductors, a lot of people have been saying, hey, I don't care about the semis, I don't trade the semis. Well, the semiconductors lead the market, so I'm going to continue to look at these you know, just fast forward if you don't like it, but I don't need to hear about it. So the semiconductors are clearly still in a downtrend, maybe finding support near the 350 level again. That's the 2004 level. No reason to be involved here on the long side. This group, I think earnings are due from Intel on Tuesday after the close, so we could see some action in here. But again, we've got a primary trend lower. Resistance up at 375 is the key level for this market. And taking a look at Intel just prior to those earnings, it's in a clear downtrend. Maybe it gaps. Who knows? I'd stay away from it personally, and I will stay away from it. And I would suggest the same. It's more gambling than anything, trading in front of an earnings report like that, particularly when we've got this potential for strong resistance up near this 24.5 level where the market broke down from. The Russell 2000, again, this is the weakest large market group. 73 is the key level of resistance in here. We've been looking at that for quite a while. Same thing here, though. The volume is running low here the last couple of days. The market was up 1% today, and there were, it's a day trading environment. On a day like today, not many of the short sales were working. So you have to focus on the long side, but be quick to take your profits. And the market, the trend is lower. We've got a declining 10, 20, 50, and 200-day moving average. That's guilty till proven innocent. There are always bounces in a primary downtrend, but they're typically short-lived and resolve themselves back to the path of least resistance, which is lower. Here's a key trend line for the Russell 2000. Basically, from the beginning of this year, you can see this trend lower is still intact, but we do see bullishly, we see a higher low, and that the key level of support in here for the short term is $70. Breaking below that, we may see a test of these lows. So breaking below $70 a share, be very careful. And the key resistance area has been and probably will continue to be that 73 area. This is another level that if it can break above that, then perhaps, well, first of all, breaking this trend line may lead to a little bit more buying. That brings us up to this 72.30, 72.40 or so, and then that 73, 73 and a quarter is the next level above that. It's good to see that this 5-day moving average might start to flatten out. Still got a downward slope to it, so really no reason to be aggressively involved in the long side in the Russell 2000. The NASDAQ 100 finished with a gain of 1.7% today. Looking at the daily time frame, though, same thing here. Lighter volume just really indicates maybe the sellers are taking a couple days off to see what the buyers can do with this market, but there's probably just an absence of supply as the market's gotten a little bit oversold in here. And that's what makes these rallies very suspicious, is that it brings in a whole new group of longs that may not have much conviction if the sellers return and start pushing this market back lower again. So be very careful. Don't get sucked into the long side here for more than trades. The 48.50 is the key level in this market. 48.75 really is the key level of potential resistance. This market's been stuck under it for the last week or so, and that 200-day moving average is starting to flatten out and maybe head lower, like the 50, the 20, and the 10-day moving average are. So a lot of reasons to be very cautious in here. It continues to be an aggressive trader's environment. Here's the primary downtrend line since just late last year, and that's a potential level of resistance that is also met with this high here from late last week at about 48.5. So maybe getting about, I'm sorry, the 48.5 is the 48.5 to 48.75 is really the key level for resistance in here. We're starting to see the potential in here for this inverted head and shoulders pattern to take form as well. More of a kind of a downward sloping pattern like this. Now, it doesn't mean you want to buy right here. It means that if you're going to buy, again, I would say you do it with options. In particular, you don't have to pay a lot of time value for if you think that move is going to occur this week. So you could buy the January call options, the January 48s. Maybe this market can rally up towards 49. Who knows? It's a very speculative play, obviously, with just a short amount of time left in it. But this is 48.5 here, down to the low of this is 46.5. So breaking past 48 would give us a 2-point price objective up near $50 a share, which would come in and close this gap. It's a good potential trade, and if it were to happen, it could happen this week, and there might be a good risk-reward in those call options. But there's a lot of mixed messages from even the stocks. You look at stocks like Apple. Apple is actually, if I just add it in here, Apple's starting to find support, it looks like, at the 100-day moving average. I don't mention that one a lot, but the 100-day moving average, if I just add this in quickly and scale that on the right, let's make that the other dotted line. You see the 100-day moving average is finding some support in there. The 10-day, 10-minute time frame Maybe this stock's ready to break out past 180. We've also got Google finding support near that 100-day moving average. Same with Baidu and SPWR. We've got WFR finding support near those. We've also got, though, Research in Motion and Garmin getting hit hard. So it's not a one-way market here. There's a lot of mixed messages. We've got earnings reports, so just continue to trade very defensively and listen to the message of the market.